Hey everyone, Les here from BG Trading. Hope you are well. Today is 7th of July 2022. Market rebound could be around the corner. I'm going to be discussing my thoughts about the market, the stock market in the next 6 months, in the second half of 2022, and why this could be a potential bottom of the market compared to past stages of interest rate cycles. So let's have a look. Just want to remind, this is not a financial advice, it's just us from BG Trading sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, avoid FOMO, and much more. FOMO, by the way, that is something that's not been happening in the market over the last few months anyway. If you like the way we trade and like our content, you can share these videos for one that you believe could be adding value to. And also, I want to invite you to become a member of our Facebook community by Grow Sell Strategy for Share Traders. Information is in the description below. So let's jump straight into our analysis of the market. So now, first of all, it's very hard to predict what's happening with the market, when it's going to be the bottom. Nobody really knows. What we can do is we can use past information, history information, to then make some assumptions based on what happened in the past in similar situations. So now, if you look into the interest rate cycles here in US, and I'm talking about specifically in US for interest rates at this stage, just because obviously Australian stock market and a lot of markets in the world are pretty much linked to what's happening in the stock market in the US. If there's a massive sell-off, most likely we will see sell-off here as well, and then become a sort of a most of the time worldwide crisis if things does not go well in the US. Now look at this. You see the cycle here from 1994 to 2017, right? Where interest rates went up, then it went down, then went up, went down again, went up big time, went down again. Now, what we expect here in this cycle. Now, if you look at comparison to what happened with the stock market over those time, interesting enough, the market did pretty well after the first or the second rate hike. And that's because normally what markets do, they actually pricing what's happening within the next 12 months. And the reason why the market start going up afterwards, I can only assume that the market normally investor priced into the market, and then once the worst comes, when the worst pass, then they start sort of looking for what's happening next after as effect of this interest rates hike. And then the first sign I've sold this week in Australia, actually, when the RBA rose its interest rates 50 points, and we saw the market actually going up afterwards, while we expecting the market to go down. So why did that didn't go down straight away but went up? Because investors have already priced into the market. And then it could be well happening in the US this month. This Friday we're actually having gonna have some figures coming up from US related to inflation. If inflation is in line to what is being expected, it could be by the end of the month when the Fed meets again to rise its interest rates, we could see a very interesting movement. We could even see a positive outcome in the market, as the market could already have priced it in. Look at this. Look what happened in 94 to 95 here. Dow Jones went up to 16%, S&P 500 13%, and Nasdaq actually 18%. So it was a positive after the first interest rates rise. Then in March 97 to September 98, there was even better. The actual stock market went up quite a lot, as you can see here, down up 17%, SP 500 up 32%, and NASDAQ up 40%. Then 99 to 01 was actually negative. It was the only actually time that was negative. And it was not much, to be honest. It was just down 1.6%, down 5%, and down 13% for the year. And that's why when we're talking about there's actually factoring the correction into it, and then obviously moving forwards from the market when the market is down towards to the next 12 months to then get this sort of return. And what I'm looking now is what's going to happen if in the next 6 to 12 months, and we could see air market doing actually outperforming what happened into the first half of 2022. So now, just to finalize, in June 04 to September 07, when we had this big cycle here, so that's what happened. The market went up 28%. SP 500 30%. I'm actually just going to mention SP 500 is easy, 30%. And then in 08 to July 19, which was this very steady but sort of rising interest rates, the market also went up 243%. Obviously, we're talking about almost a decade then. So as you can see, in the average change was 17.4%, and that's positive. So we could see a positive outcome in the market, at least for the short term. Obviously, corrections followed by, but we might see some consolidation and even some start of a sideways cycle with possible new higher lows and higher highs in the market, which could lead to potential upswings, and therefore giving us some opportunities to apply BGS20 and BG trading strategy in especially in stocks that has been oversold, such as tech in the tech space, healthcare, and even other spaces as well. So, guys, this is my just my considerations regarding whether the stock market rebound could be around the corner. Obviously, there's no certainty in the stock market. We use past information to take our decisions, and based on past information, everything points to a positive second half of 2022. But most important, why we want to act is when actually the market is down, not when the market is up. Because when the market is up, you will be looking at stocks at the FOMO area, and that's when people get trapped on positions buying the wrong time. So as anxiety and stress are up, this normally are the times to be looking at enter into the market. Obviously, the safer you go with large caps, the less risk you will be taking. If you want to take higher risk, obviously there is potential for higher returns. Take in consideration good quality businesses, and that's what we take with our VIP members. So if you want to learn on the stocks that we're trading, so just jump into our community or bgtrading.com.au and talk to the team. And we're going to explain what BG Trading in our online course is all about. So guys, hope that enjoyed this video. I'll see you in the next video. Bye. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand, and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.